Alright, now before we continue on, I want to talk about a subject that we covered in the Forex market history, and that is a pip. Remember, a pip is a price interest point, and what it means is the smallest movement of the market. Now, if you've ever looked at a stock, you know that most stocks trade in pennies. So you'll get a quote on IBM that looks something like 75.25. And if IBM goes up, it'll go up to 75.26. So you've got the smallest movement here is 1 penny. Okay? Well, in the Forex market, it trades in much smaller numbers. And here's what it looks like. If you've noticed, we have a very strange looking number if you're used to looking at stocks. Let me go ahead and write it out so it's a little bit bigger for you. 1.9579. Now you notice that there are 4 numbers after the decimal point. Well, a pip is the smallest number that the market can move, which is this last number over here, 1 pip. So if price was here at 19579 and price moves up, you'll see price go to 1.95, you guessed it, 80. So it's moved up 1 pip. Now, when I talk about pips, P-I-P-S, I'm simply talking about how far has the market moved. Instead of saying dollars or points or cents, in the stock market you'll talk in terms of dollars. Something has moved up $2, or you might talk about points, or you might talk about cents. So something might have moved up $2 or 2 points or 25 cents. That simply means that price is moving. Well, in the Forex market, we just simply talk about pips. So, if something, let's look at price. If something is moving, let's take this price right here from 90. If something's moving from 95.79, if it moves up 10 pips, then it's going to go to 1.95. You guessed it, 89, 10 pips. If it moves, let's say, down by 20 pips, 1.95, you guessed it, 59. And if price is going to change by, say, 100 pips, if it moves up by 100 pips, 1.9, remember we're starting here. If we add 100 pips to this, 1.9, you guessed it, 679. See? 100 pips. If it moves down by 100 pips, 1.9, yep, 479. Okay, so again, a very simple concept. We're simply adding and subtracting based on these last numbers here. Now, what you've probably guessed by now is that if the market has a really big move, what is that going to look like? Well, let's take this price here, 1.9579 again. If we're looking at price starting at 1.9579 and the market moves up 1,000 pips, that means it's gone from 1.9579 to 2.0579, right? Because we're simply adding 1,000. 975. Remember, 9 plus 1 is 10. Carry the 1, 2. There we go. 2.0579. Now, if price starts at 1.9579 and moves down by 1,000, that one's actually a little bit easier. We can just look at 1.8579. Prices move down. So you see, we're simply looking at a slightly different way of calculating the numbers, and you just have to remember that when we talk about pips, we're simply talking about how much has price moved rather than in dollars or cents or points. We're simply using another word. So again, it's a very, very simple concept, and I'm going to refer to pips almost exclusively from now on. So when I talk about price or I talk about price moving, just keep in mind I'm going to talk about it in terms of pips. Okay, in this section we're going to cover another tool which will help us to look at charts. Now, if any of this seems confusing with the different bumps and wiggles and whatnot, don't worry. This tool will really make things easier. And this tool is called a candlestick chart. Now, it's called a candlestick chart because the chart was invented in Japan, and that's what the Japanese called it. And they call it even that today, a candlestick chart. Now, on the MetaTrader platform, right here in the middle of your screen, you should have three little icons. These icons are going to change your chart. Now, you can see that one of these looks like it's pushed down. And that toolbar button, you can see, has a little bar on it, hopefully. If it's too small for you, just know that this first bar will make this type of chart, or a bar chart. This toolbar button will create the candlestick. Now, if you don't have this toolbar, there are a couple of ways that you can get your chart on the screen. If you right-click, select Properties, you can go to Common, and then you can select here. You see there's a bar chart, candlesticks. Go ahead and select candlesticks and click OK. Now you can see the chart is drastically different. Let me switch it back to a bar chart. So there's the bar chart. Here are the candlesticks. One more time. There's the bar chart. There's the candlesticks. Okay? Now, there are a couple of reasons why the candlesticks are quite a bit easier than the regular bar chart. So let me go through them very, very quickly. Now you notice that we now have black and white. Well, black is down. White is up. So at a glance, I can see which bars are down, and here you can see are three of those, and which bars are up. Here's a whole bunch of up bars right there. So what does this mean? Well, doesn't this just mean price is moving down? Absolutely it does. Doesn't this just mean price is moving up? Absolutely it does. So we can tell very, very quickly whether or not a candle, remember these are called candlesticks, whether a candle is up or down. Now, when I speak about candles, and from here on out I'm going to be using candlestick charts. So instead of saying bar, I'm going to say candle. Now remember, candle equals a bar, and remember each bar is simply a slice in time, whether it's 1 minute, 5 minute, 15, an hour, a day, a week, or a month. A candle is a bar, is simply a slice in time. That never changes. Now when we're looking at a candlestick, we still have remember down here on the status bar, the open, the high, the low, and the close. Remember those. We still have that information on the candlestick. Here's the low. Okay, it's the lowest part of the candle. Here's the high. It's the highest part of the candle. The open, here, you can see that the open is lower than, here's the close. And that just makes sense, doesn't it? If price is moving up, doesn't it make sense then that the open would be lower than the close? That simply means that price is going up. Open is lower than the close. Now, if the open is higher than the close, the bar is down. So here's the main difference. Remember, the bar had the line in the middle and then the two bumps, and the open was always on the left and the close is always on the right. Okay, that's how bar charts work. Well, with the candlestick, it works in a very, very similar fashion. If a candlestick is down here, then the open is always higher than the close. If a candlestick is up, then the open is always lower than the close. See that? So, let's look at the different parts of the candlestick bar. If a bar is up, the open is down here at the bottom. The close is down here at the top. Now, there are two parts to every candlestick, and you've probably guessed what they are by now, although we don't have a name for them yet. This part here, between the open and close, is called the body. The body. The parts here, see them here, here, here. Okay, the parts here are called wicks. Wicks. Each one of these. Now, if you think about it, it's just like what we would think about with a candle. If we have a candle and we've got our little thing here, okay, here's the body, and then here is the wick. This is my little flame. So if we're looking at a real candle, we've got the candle body and then the wick sticking out at the top. Well, with a candlestick, here's what we can tell. We can tell that the candlestick opened right here. And at some point during this slice of time, which this slice of time is 1 day, price traded lower. Okay, that's what this wick means. Then price went up. And also sometime during the day, the price went higher, but then closed down slightly. So let's look at what this might look like. If we could blow this 1 day up, what we might see is that price starts here, trades down a little bit, does this, then starts to trade up, and then does that. So here's the close, here's the open, here's the wick, here's the wick. Okay? That's simply what this means. So at a glance, I can instantly tell about what happened during this slice of time. Can you see that? Hopefully that example made some sense for you. But remember, if any of this is confusing, let's get on the phone, shoot me off an email, and I want to make sure that you understand what the different parts are. So let's go through them. The part in the middle here, this is called the body. The parts at the top and the bottom here, here and here, these are the wicks. The wicks. The open is lower than the close if the candlestick is up. I'll use this one here. The open is higher than the close if the candlestick is down. Okay, very, very simple. Now later on, what we're going to do is take a look at candlesticks, and I'm going to show you how the Japanese discovered different candlestick patterns mean different things. And it's a very cool function of the candlestick pattern. Now remember, we want our trading, or we want our life really, to be as simple and as easy as possible. And I'm telling you, candlesticks will really make your trading simple, and it'll make your life easier because you don't have to spend so much time looking at the chart. Once you get used to looking at candlesticks, I'm telling you, you will see these patterns jump out at you. You'll instantly be able to see whether a candlestick is up or whether it's down. You'll also be able to see whether price is moving up or it's moving down. It's very, very nice, and it's a very handy feature.